Eric Muathe, Muathe.com. Let's take a look at some charts here. We begin with the Japanese ETF, the DXJ. And over the last couple of weeks, of course, we've been trading sideways. So the question is, are we going to break out of this range or break down of this range? Now I'll show you some simple lines to consider. Let's take a look at, this is a 2-year weekly chart. Oh, by the way, let me digress a little bit here. We've been making an improvement to new highs, but take a look at the fact that we've been making lower and lower RSI highs. That negative divergence, especially if you consider that the most recent weekly closing high there came with the RSI failing to hold above 61.8. That tends to be the worst type of negative divergence. So that's the backdrop on the weekly chart. Let's take a look at the all data monthly chart. I'll share with you one line. And here's a line on the monthly RSI. You can see that we broke below that line sometime in early 2016. We are coming back to test it. Failure to move above that line might suggest that around here things are turning and that they start pointing down as long as there's resistance confirmed on this line here on the back test. Let me share with you some other charts worldwide. Take a look at the Sweden Titans, the Swedish market, and I'll draw one line connecting the previous lows. Should be something like that. And you can see I talked about this a couple of weeks ago. We broke below here in 2015. We are coming to backtest this line in 2017, and we seem to be rejected right now. That is also maybe why we are coming off the highs, and this also pointing to another market worldwide that looks to be pointing down. Let's take a look at a market that had already done this type of negative signal by way of a one line retest failure. It is the Canadian market. I talked about this for many weeks, and we can see here that after breaking below in 2015, we tried to move above this line in 2017. We failed. The indication there was prices were starting to coil down. Oh, by the way, there's also failure to move above 69.1 at the most recent highs here. So that's where we are coming off the highs. Take a look again, go back to that Swedish chart and draw the same line right there, which also coincidentally or not happens to be showing another 69.1 rejection. That tends to be a sell signal by itself. For example, take a look at this double top rejection when trying to move above 69.1 for the highs here and here in early 2011. Let's move on here. Let's take a look at the VGK, the ETF, the FTSE Europe ETF, and again we draw the simple straight line and we see what we get. Should be something like that, the previous support line, and again we see the same type of reasoning. Failure here to hold, we broke, we dropped lower, we come here, we are showing rejection on the back test, suggesting yet that European markets or the FTSE as a whole seem to be pointing to the indication that more than likely markets are turning and now they look to be pointing down. We'll see this. We'll see whether this is what's going to happen. It's a good live study. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings.